Sure. So to give perspective, let's say a year ago, no growth essentially from AI that's attributed to Azure, maybe 1%. Today, 12% of the growth is AI driven. So in terms of their
Right.
backyard on the enterprise, 34% growth, AI is driving that. Now others are getting in on that party. Google, I see what we'll see from Amazon tonight, but it just speaks to the AI revolution. It's only the second inning as this all plays out. And you look at Meta, look at that CapEx. I mean, they're
Right.
spending money like a 1980s rock star, but that's great for Nvidia and great for AI.
What's your lead risk factor here on Apple or Amazon today? There's a paragraph. Dan Ives' major risk factor is.
Lead risk factor is just good, but maybe conservative guidance. Street will kind of read into that knee jerk. That just creates the golden
Right.
buying opportunity to hit pound the table.
AI paying off for some, not others. Let's just hear about Alphabet's perspective.
Well, I definitely think one of the interesting things is everybody was worried about how much money they were spending on AI, and now they're using AI. And I heard their CFO speak yesterday talking about how they're going to be using AI to actually become more productive and reduce expenses. So I think they're already starting to become more productive using AI itself.
Using AI, managing to build up in terms of the cloud offering. We're also seeing not much competition eating into the search offering. Are they going to manage to keep that moat there?
Well, and I think with the search offering, and Sundar was talking about that yesterday, customers are asking more questions, they're asking more important questions, more complex questions, and AI is delivering. And so I think the opportunity is tremendous.
Mel, final question on Alphabet, but sort of looking ahead as well to Microsoft and later Amazon. The calculus is the same, right? You look at capital expenditures going forward and then decide if it's showing up in revenue growth and bottom line growth in terms of AI. Do you see that with Google?
Yes, I do see that with Google, and I see it with the other two as well. I think we sort of underestimate just the incredible impact of AI in terms of productivity and efficiency in these companies, as well as in revenue growth.
AMD is going to do about $12 billion of data center sales this year. Nvidia is going to do $110 billion. What do you make of AMD?
I think they've got to catch up.
Extrapolate?
Opportunities there.
Okay, let's talk about the...
Searching for a stock that has a history of exceeding earnings projections and may be in a strong position to continue the trend in its upcoming quarterly report. One excellent option to take into consideration is Nvidia, a company in the semiconductor general business. Particularly when considering the last two reports, this manufacturer of artificial intelligence and gaming graphics chips has a history of exceeding earnings projections. Over the last 2 quarters, the company's average surprise has been 8.58%. Nvidia's earnings for the most recent quarter were $0.68 per share, which was 6.25% more than the estimate of $0.64 per share. As a surprise of 10.91%, the company's earnings for the preceding quarter were $0.61 per share instead of the $0.55 per share that was anticipated. Because of this history of earnings surprises, Nvidia's projections have been rising. Additionally, when paired with its strong rank, the stock's positive earnings ESP, expected surprise prediction, is a strong predictor of future earnings beats. Our analysis reveals that equities with a rank number 3, hold, or above with a positive earnings ESP generate a positive surprise around 70% of the time. Put otherwise, if you have 10 companies in this combination, there may be as many as 7 equities that outperform the consensus prediction, the most accurate estimate, which is a variation of the consensus with a change-related definition, is compared to the consensus estimate for the quarter by the earnings ESP. The premise is that analysts who update their projections just prior to an earnings announcement have access to the most recent data, which may prove to be more accurate than what they and other consensus makers had previously projected. With an earnings ESP of plus 0.54% at the moment, Nvidia indicates that analysts have recently grown optimistic about the company's earnings outlook. When paired with the stock's rank number 2, Buy. This strong earnings ESP suggests that there may be another beat coming. We anticipate that on November 20, 2024, the company will release its next earnings report. Investors should be aware that while a negative earnings ESP rating lowers the metric's predictive potential, it is not a sign of an earnings miss. Although many businesses surpass the consensus EPS estimate, this may not be the only factor driving up their stock prices. The premise is that analysts who update their projections just prior to an earnings announcement have access to the most recent data, which may prove to be more accurate than what they and other consensus makers had previously projected. With an earnings ESP of plus 0.54% at the moment, Nvidia indicates that analysts have recently grown optimistic about the company's earnings outlook. When paired with the stock's rank number 2, Buy. This strong earnings ESP suggests that there may be another beat coming. We anticipate that on November 20, 2024, the company will release its next earnings report. Investors should be aware that while a negative earnings ESP rating lowers the metric's predictive potential, it is not a sign of an earnings miss. Although many businesses surpass the consensus EPS estimate, this may not be the only factor driving up their stock prices. However, even if they fall short of the average estimate, certain companies can continue to maintain their footing. To improve the chances of success, it is crucial to look into a company's earnings ESP prior to its quarterly release. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
The results from the cloud giants, Amazon, Microsoft, and Google, are giving us some hints on just how much their AI investments are returning. They might also show us that cloud leadership is shaking up a little bit. Deirdre Bosa has more in Tech Check. Deirdre?
Hey, Kelly. So no question, AI is the next catalyst for growth at all the hyperscalers. Whether it can offset higher spending, CapEx, that's still very much unsettled. But a few years into this major shift, we can see how it's changing the cloud landscape. Annual revenue growth for all of them was sliding going into 2023 as the broad enterprise migration to the cloud, that was decelerating. But generative AI was just ramping up. Microsoft, that's the blue line on this chart, had the early lead and began growing its top line at a faster rate than Amazon and Google. That reversed, though, last quarter. Google Cloud surprising on the upside, growing 35%. That was a big surprise. It is the only hyperscaler that both owns the foundational models that are powering its AI offerings and also has the cloud infrastructure for customers to access them. So in that way, in a way that Microsoft and Amazon really can't, Google can lean on its own expertise to compete in the space. Microsoft's early lead, meanwhile, it has stalled. That's what we learned this quarter. Its OpenAI association looked more like a burden, a $1.5 billion hit, largely thanks to OpenAI's expected loss. Remember, too, that part of Microsoft's investment in OpenAI was in the form of discounted cloud credits, potentially leading to lower short-term income versus standard market rates that it might otherwise get. And now CEO Satya Nadella is saying that cloud is facing capacity constraints. Solving those constraints, that means more CapEx, which will weigh on those AI returns. Finally, I just want to mention Amazon's AWS, that's the orange line, subject to the law of large numbers. It's the biggest player by far, but its AI strategy also seen as lagging that of Microsoft and Google's. Margins have improved, but as you can see, its top-line growth pretty flat over the past few quarters, suggesting, Kelly, that it might have more to do to really position AWS as a winner in the age of Gen AI. But it is clear that sort of a new race is off between these hyperscalers.
Given its current valuation, Nvidia Corporation's stock appears to be trading at a lower price than the industry average. The trailing 12-month price-to-earnings, P/E, ratio of Nvidia's stock is at 63.28. Much lower than the industry average of 72.04 for Zacks Semiconductor General. The stock's outstanding year-to-date, YTD, performance is what makes it a more profitable deal right now. Nvidia's stock has soared 168.1% so far this year, surpassing the industry's 128.8% increase. Nvidia is now one of the leading companies in the semiconductor industry thanks to its remarkable comeback, while AMD, Micron Technology, Advanced Micro Devices, and Intel Corporation are far behind. Shares of Advanced Devices Micro and Intel have decreased 2.3% and 57.2% year-to-date, respectively, while Micron's shares have increased 16.8%. Investors may be questioning whether there is still a chance to purchase Nvidia stock in light of this outperformance and appealing value. A major factor in Nvidia's quick ascent is its crucial position in the rapidly expanding field of artificial intelligence, AI, particularly generative AI. It is projected that demand for generative AI applications, which boost efficiency across industries, will soar. Fortune Business Insights projects that the global market for generative AI will expand at a compound annual growth rate, CAGR, of 39.6% from 2024 to 2032, reaching $967.6 billion. The demand for NVIDIA's high-performance graphic processing units, GPUs, which are essential to the development of AI, is anticipated to increase due to this market's exponential expansion. The remarkable processing capability of NVIDIA's state-of-the-art GPUs allows AI models to scale efficiently. These cutting-edge processors are quickly becoming essential for companies making AI investments. NVIDIA's cutting-edge technology provides unparalleled processing power essential for the intricate calculations AI demands. As the leading supplier of the technology underlying these applications, NVIDIA stands to gain from companies' growing investments in AI infrastructure. The impact of NVIDIA goes far beyond AI. The company's GPUs are essential to developments in industries including manufacturing, healthcare, and automobiles. NVIDIA's automotive solutions aid in the development of autonomous vehicles, a market that is anticipated to grow rapidly over the next 10 years. NVIDIA's GPUs are transforming medical diagnostics, boosting imaging procedures, and enhancing patient care in the healthcare industry. In the eighth sector, NVIDIA is positioned as a robust and varied growth engine due to its wide, multi-industry application. Furthermore, NVIDIA's reliable data center solutions are becoming more and more popular. The need for robust data center infrastructure is increasing as more businesses invest in cloud and edge computing, making NVIDIA's data center division a vital growth engine. As companies step up their efforts at digital transformation, this industry alone is expected to greatly increase the company's sales, securing NVIDIA's potential for long-term growth. NVIDIA has demonstrated exceptional financial performance. The company reported a huge 122% year-over-year growth in revenue and a 152% increase in non-GAAP earnings per share, EPS, in its second quarter fiscal 2025 report. This financial stability demonstrates NVIDIA's capacity to successfully manage market competition while taking advantage of robust demand. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Let's do some damage assessment first, KG. Today's bounce, it's kind of fading a little bit. What are you seeing?
Yeah, it gets a little bit ugly here, Oliver, when you're looking at the composition of today's market. Obviously, we did see some areas of resistance at around the 5770 level, and then we started to fade. And that run-up this morning was really aggressive call buying taking place, not only when you're looking at it from an index level, but also on an individual stock level. And when we got to that 5770 level, that's when we started seeing a little bit of an unwind, actually a pretty decent unwind in those calls. And you're kind of seeing the same thing happening now. So I do suspect that probably through the close or going to the close here, we're actually going to see a pretty aggressive or violent close, if you will. It doesn't mean that it can't be aggressive to the upside. It doesn't mean it can't be aggressive to the downside here. But we're in an environment where we have very low liquidity when you're looking at the E-mini S&P futures, and we are going into a weekend for the election, right before the election. So we could have also some de-risking taking place. So as you can see with this chart here, we have the intraday levels that I've been kind of focusing on. 5730, that's a negative gamma area. You want to be able to hold that. We had a nice little battle there. You can see there see it with the purple channel. We were able to try to get back above that channel line here, but now we're fading and kind of getting right back to that level. 5720, keep it on your radar here, but it is not outside of the realm of possibility, Oliver, that we could actually give up all of these gains here today and actually get close to 5,700, which is what we were seeing earlier this morning when it came to put flows.
Yeah, my baseline from this morning was that bonds were going to have to give it back, and that would probably weigh on at least the Russell, but it kind of seems like this is just sort of a market-wide drift downward. I'm not sure I want to put too much blame on bonds. I think it certainly complicated it this week, but it looks like from the positioning, the market just kind of flipped across the board because the Russell, S&P, NASDAQ, all the charts trajectory-wise look exactly the same throughout the day.
Yeah, exactly. If you look at the equal weight S&P 500, it's pretty much given up all of its gains, and it was up almost 1% in today's session. That's really the gauge that I look at. I look at the equal weight S&P, and then I look at the top 7 or 8 stocks in the S&P 500. That kind of gives you a little bit of an indication as to the direction of the market, especially if the equal weight S&P does fail here. Once again, we just have to hold. I mean, it's a nice day. We have a positive day on the session. We're not near the lows that we had yesterday, but if we're in an environment here where it could be very fun going into this week. And if you are one of these speculators that like to trade on an intraday basis, our balance level is 57.53. So that would be an area where dealers could be net neutral for the day. There could be also some pen risks sitting at 57.50. So earlier this morning, you saw a lot of call selling happening at 57.60, 57.70. And then right before we had that move to the downside, a lot of buyers into the 57.50 puts were getting in there. In the open interest side of 57.50, there's a lot of positioning. So keep your eye on that. But once again, I lean more towards us giving up these gains rather than maybe a rip rally into the close.
So I guess then if we get back to
NVIDIA's development trajectory and position as a key leader in semiconductor technology for artificial intelligence are highlighted by the company's anticipated $32.5 billion in revenues for the 2018 third quarter, up from $18.12 billion in the same period last year. The consensus estimate for NVIDIA's fiscal 2025 and 2026 revenues and earnings indicates consistent growth going forward, demonstrating faith in the company's market dominance in a number of industries, including professional visualization, gaming, and the automotive industry. One major advantage of NVIDIA is its financial stability. The company's cash reserve increased from $31.44 billion in April to $34.8 billion at the end of July 2024. NVIDIA can withstand possible market swings and sustain further investments in its expansion plans thanks to its strong financial sheet. This financial strength gives NVIDIA a strategic edge in the quickly changing tech sector, putting it in a position to take advantage of potential future growth. NVIDIA is an interesting investment due to its strong financial position, wide range of industry applications, and appealing value, as well as its dominant position in AI. The company's remarkable outlook, substantial cash reserves, and strong financial results provide a great basis for future growth. For investors hoping to profit from the upcoming wave of technological developments, NVIDIA stock offers a significant opportunity given the growing demand for artificial intelligence, AI, and the developing uses of NVIDIA's technologies across multiple industries. To take advantage of NVIDIA's bright future, now is the ideal moment to purchase the stock. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector.